Hey everyone, welcome to our CPA revision series, and today we will work through question 4 from the December 2022 Financial Reporting and Analysis exam. This is all about helping you get ready for your exams, and for the full course and more exclusive content, check out our website and the link to our WhatsApp group down in the description below. So let's go ahead and look at December 2022 question 4. The question read, ratio analysis has over time proven to be a useful financial tool for decision making. However, reliance on ratios for decision making has inherent limitations required. Citing 6 limitations, justify the above statement. So in this question, the examiner wants us to analyze the limitations of using ratios. Number 1, we can say that ratio analysis does not or uses historical data. Since ratio analysis uses historical data, it might not show us the current performance of the business. It might not show us how the business is currently performing since we are using historical data. Next, we can say that accounting data can always be manipulated. And an example would be a situation where management uses creative accounting to inflate the profit of a company. An instance would be if the management is paid on commission or based on how profitable a company is, they might use some creative accounting to increase the profit of a company so that they get more commission out of it. Next, we can say that ratios ignores inflation. So ratio analysis will not take into account the fluctuation in the values of interest rate and prices of other factors of production. Next, we can also say that it ignores time value of money, and we know that time value of money means that a shilling today is worth more than a shilling tomorrow, and in that case, and this the reason for that is because a shilling that you have in hand right now can be put in immediate use. So ratio analysis will not consider time value of money. Next, we can say that interpretation of ratios changes according to circumstances of each case. And lastly, adoption of different accounting policies from company to company hinders comparison. So it will be difficult for us to compare two companies since both companies might use different accounting policies. Number B says that the following draft financial statements were extracted from the books of Mrima Limited as at 31st December. So we have 2021 and 2022. We are given the statement of profit or loss and the statement of financial position. So you are required to calculate for each year 2 ratios for each of the following user groups, which are of particular significance to them. We have the shareholders, and we also have the trade payables and the internal management. So let's go ahead and look at those ratios. So we can start with the shareholders. So this is December 2022 question 4. December 2022, question 4. And the examiner wants us to calculate the ratios for each of these groups. The first one is the shareholders. And for the shareholders, they are mainly interested in wealth maximization. And for that reason, they will focus on, they will mainly be interested in how the company is maximizing their wealth. And to check that, they will mainly look at the share capital or the shares in that company. So we have the first ratio is the earnings per share to see how much each share earns. Another one is the dividends per share, and this one will show them how much dividends they are getting per share. Another one will be the dividend payout rate or ratio, and this will show us the rate at which the company is paying the dividends from the retained earnings or from the company's income. And lastly, we can also have the dividend cover. And the dividend cover in this case will show us how many times a company can pay dividends to its shareholders out of its net income. So let's go ahead and calculate those. And for us to calculate these, we will need first of all to get the number of shares. We'll need to get first of all the number of shares in that company. And to do that, let's go back to our question. And we can see that the shares of 20 shillings each, the first one is given us 19,840 and 19,840, which means that the number has not changed over the last year. So we take 19,840 divide by the value of each share is 20 shillings. We divide that and get 992. Now it's much easier now to calculate the EPS. So we have 2021 and 2020, 2021 and 2020. So we start with the EPS or the earnings per share. And the earnings per share, we take total earnings divided by the number of shares. So the total earnings for 2021, we go back to our question, and the total earnings, this is simply the profit for 2021, is given as the total profit for the period is 23,320. Divided by 992, and this will give me 23.51. So we go ahead and calculate for the other year, and the profit for the period for 2020 was 19,040 divided by 992, and this will give us 19.19. So we can go ahead and look at the dividends per share, DPS, the dividends per share. So we take the total dividends divided by the number of shares. Divided by the number of shares. So the total dividends in this case will be 4,800. You can just check. The total dividends paid in 2021 were 4,800 and 2020 was 4,480. So we have 4,800 divided by 992 number of shares. So we have 4.84. And for the next year we have 4,480 divided by 992, and this will give us 4.52. 4.52. Next, we can look at the next ratio will be the DPR. And the DPR will be given by the DPS over the EPS. So the DPS is 4.84 divided by 23.51 times 100. This will give us 20.56%. That is the rate at which they are paying out dividends. We go to the next one. We have 4.52 divided by 19.19 times 100. This will give us 23.55. Good. The last one is the dividends cover. And for the dividends cover, we have EPS over DPS times 100, EPS over DPS times 100. So we take it's the inverse of the other one, so we take 23.51 divided by 4.84. And remember, the dividends cover, we said, shows us the number of times the company can pay dividends to its shareholders out of its net income. So in this case, if we divide the two, we get 4.86 times. 4.86 times, and we do for the other one simply the inverse. 19.19 divided by 4.52, and this will give us 4.25 times. 4.25 times. So those are the ratios that the shareholders might be interested in. Now we go ahead and look at trade payables. For the trade payables, we'll mainly be looking at the current ratio and maybe the acid test ratio. And the current ratio is given by the current assets divided by the current liabilities. So the current assets we get from the income, the balance sheet, we get from the balance sheet. So these are the current assets. We are given the total here 199 to 30 and 184 894. We have them there. The current assets are 199 to 30. Divided by the current liabilities. We are given the current liabilities as 84,950 divided by 84,950. So we divide the two and we'll get the ratio as 2.34 is to 1. 2.34 is to 1. We do for the other year. 184,894 divided by 73,724. So we have 2.51 is to 1. And next we have acid test ratio. So this is a refinement of the current ratio, and the only adjustments we make, we take the current asset minus the stock or the inventory divided by the current liabilities. So the reason why we less the stock is because that stock cannot be easily converted into cash, and that's why we refine this ratio by reducing the stock. So we have 199 to 30 minus the stock is given us 199 to 30 minus the stock. We have the inventory as 109.10. So we less that, we get 98,320. 98,320 divided by the current liability 84,950. So we have it as 1.16 is to 1. I do then for the next year. The current assets are 184,090 and the inventory for that year was 8290. We less the 2 and we'll have 104,604. 104,604 divided by 73,724. So if we divide that, we get 1.42 is to 1. 1.42 is to 1. And lastly, we can look at the internal management. So the trade payables are mostly interested in the liquidity of the company, and the liquidity is the ability of a company to pay its debts as and when they fall due. and that's why we are looking at current assets and the current ratio and the acid test ratio. Now, the internal management is another one. Internal management. So the internal management, they are mostly interested again in the liquidity of a company. And also they might also be interested in the profitability ratios, So we can do some profitability ratios such as return on capital employed, which is given as profit after tax divided by net assets times 100. Times 100. So we can take the profit after tax is 23,230 for the first year. And the net assets we can get from the balance sheet, and we know that the net assets is comprised of assets minus liabilities, or current assets minus current liabilities. So we can just take the figures here and we'll have 100,000 plus, because the balance sheet has balance, we can just extract the figure by adding 100,000 plus 39,680. 100,000 plus 39,680, which is give us 139,680. And let's calculate that, and that is giving us 16.7%. This will be times 100, so 16.7%. We do for the other year, where we have 19,040 divided by 121,116. This is giving me 15.7%. 15.7%. So the management again can also be interested in the liquidity. So we can also do some liquidity ratios here as well. And that's it for today's question. And remember, thank you for tuning in. And if you found this information or this revision question analysis useful, you can check out our website for the full course, or join our WhatsApp group for more tips and resources and direct support from our instructors. So good luck with your studies, and see you next time.